Namaskar, this is AKhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. In an interesting article in the print, Mr. Hussein Haqqani, a former ambassador of Pakistan to the US and now a research scholar based there, he writes that the Biden administration must be alarmed by the recent decisions of several foreign companies to either exit out of the Indian market or to put their long-term India investment plans on hold. He says that the US has for years hoped to assist India's rise as a way to checking China's growing power. But even though India is the world's fastest growing major economy, its economic policies continue to disappoint American, European, and Japanese officials and investors. Thus, while the US tries to support India's GDP as a counter to China, it yet doesn't catch pace since foreign companies remain averse to investing in India due to the oppressive business environment here. Much as the US may try to push investments to India, the ground level administration in India does not support such moves at all. The article mentions how companies leave India despite the lure of its big domestic market, and the list of those companies which continue to exit out of India is not small. We have a huge market. We will be the most populous nation in the world probably next year. Despite such a market, they continue to exit. It is all about the disappointing ecosystem here, where the frustration is with the heavy laws and the coercive ways in which they are administered. The laws here are just too many, often overlapping, very interfering, and often very difficult and expensive to comply with. A powerful, corrupt, and insensitive bureaucracy only makes it worse. The fear of the unknown hangs in the air as far as an entrepreneur is concerned, and for that, the buck stops on the government's table. Mr. Haqqani mentions that according to the US State Department's 2021 World Investment Climate Statement, India is a challenging place to do business. He then says that according to the Heritage Foundation's 2022 Index for Economic Freedom, India ranks a lowly 27 out of 39 countries in the Asia Pacific region, with an overall score below the regional and world averages also. From the perspective of the US and India's Western partners, it is a case of unrealized expectations as far as India's economic growth is concerned. He says that even though many nations, including the US, Australia, Japan, and the EU, see India as their future partner, their companies are, however, either pulling out of India or are reducing the size of their operations in India. He mentions a number of companies which have done that in recent times. He mentions Harley Davidson, Royal Bank of Scotland, Holcim Cement of Switzerland, and Citibank have all already announced their plans to downsize or leave India. He then says that the German retailer Metro is selling off its India operations after struggling in India for 2 decades. He then says that Tesla and Ford Motor have put on hold their plans to make electric vehicles in India because of high tariff and tax barriers here. The French Spirit Group, which makes Chivas Regal and Absolute, has announced a decision to place its new India investments on hold because of its everlasting tax disputes with tax authorities in India since the past 30 years. IBM has $865 million stuck in an escrow account since 2009 because of its retrospective tax dispute here. And that dispute is akin to what Vodafone faced, and that money still lies blocked in an escrow account. He mentions how the government rolled back its retrospective tax policy only after the government lost its cases in international forums, during which many foreign companies, led by the likes of Vodafone and Kane Energy, suffered enormously. If that is how powerful large MNCs with the deepest possible pockets and resources fare in India, and they leave it out of frustration, preferring to abandon the lure of a large Indian domestic market only to ensure that their basic capital remains protected. If that is the case, with large MNCs, then the scene for the domestic MSME sector companies who have very little depth of resources, who have very little voice in what is happening, who have no influence or connectivity in the administration, in their case, the scene is much worse. And here we are only talking about the scene for them by way of oppression that they face from the government setup and administration, which otherwise repeatedly and unconvincingly keeps claiming to be an investor-friendly administration with an improved ease of doing business, which actually it is not. As we said, unconvincingly they keep claiming, but ask the ground entrepreneur and he will disagree with it. The fear of the government starts from the heavy and harsh business and corporate laws, which are often generously loaded with system-driven provisions of penalty and prosecution for the smallest of unintended violations. And that's not just with revenue laws like income tax and GST, but it is also so with other business and corporate laws that a small entrepreneur faces. Penalty and prosecution today are the name of the game, and with little depth of capital or the support of external funds like bank loans, etc., to meet such contingencies, those not being so easily available, the MSME entities simply close down when they face the rigors of such notices, rendering their promoters without a livelihood and often jobless too. Curiously, many a small company without any activity or operations at all and no public interest whatsoever, no public funds whatsoever, they end up paying lakhs of rupees as penalty for their mere failure to file routine annual returns with the Registrar of Companies. Many a tiny GST assessee has been forced to pay GST which his vendor was unable to deposit, together with heavy penal interest and penalty, for the reason that he paid the vendor but the vendor could not deposit it. A simple sounding system generated notice from a revenue department is enough to inflict huge damages or fatalities to a small business unable to withstand the might of the government and the laws that it administers. The costs of battling such notices and proceedings can render a MSME bankrupt, and so is it if an entrepreneur chooses not to do so. The larger picture that emerges from these numerous system-driven notices under these laws is that the first issue that comes is that the business of a small entrepreneur, by virtue of such notices and proceedings, is disrupted, decimated, and often closed, if not downsized, because of the proceedings that they need to follow under these notices. The businessman is forced to ignore his business operations and start following up on the notices, and because of that, he suffers immensely, the business suffers enormously. The second point, the business suffers losses. Its cash flows are hit with little chance of raising any funds from banks and other institutional lenders. A single notice threatens to snatch away the hard-earned profits of a lifetime of a small entrepreneur in the MSME and in the unorganized sector. The third, with their capital at risk, eroding cash flows and potential losses, there is widespread mental stress and depression among the MSME entrepreneurs today, who are ironically the country's growth engine and its biggest job creator also. And this segment today actually faces widespread depression. The fourth, the way the law is administered smacks of arbitrariness, and it erodes the faith of the common entrepreneur in the law as well as in the system that administers it. Further, with MSMEs downsizing or closing down, they are losing their market share in the respective sectors, which is being gobbled up by the large companies, thus building rising inequality in the economy and also in the Indian society. A lot of inequality has come because MSME units have vacated a market space, and that has been taken over the big ones who are prospering. The MSMEs are not. The next point, these notices are primarily system-driven, and the proceedings under them are often faceless, thus denying the entrepreneur a genuine opportunity of being heard, resulting in a build-up of unwanted disputes where the government happens to be the biggest litigant. India's overburdened and creaky courts are overcrowded, and they are clogged with mindless disputes which could have been easily avoided at the very start if such notices generated by the system had not been issued. The suggestion is that small and unintentional violations must be condoned and pardoned, and they should be subject only to warnings and not to harsh and big penalties, and also not be carried to court by way of prosecution, which we often see nowadays. Finally, India has been facing a flight of talent and capital with the educated and resourceful entrepreneurs who have overseas options, preferring to migrate and locate to investor friendly and less interfering, less oppressive nations as far as the business ecosystem, the economic ecosystem is concerned. The net result of all of this is that India fails to realize its growth potential, which it badly needs to, with its growing population and the need to provide food, education, medical facilities, and employment to its growing millions. We need to grow rapid, we need to grow fast, and for that, we need to get this kind of an ecosystem out. The second, due to this, India will not receive FDI inflows as per its potential, which it urgently needs. India's share in global FDI remains a puny 2.8% as against China's share of 20.3%, despite all the geopolitical friction that China faces today. The third issue, with a relatively small GDP of $3.1 trillion as against $17.7 trillion of China, we will always face a more powerful and resourceful adversary till we do not grow fast and close the GDP gap with China. The next, India's growth rate will remain considerably inadequate as compared to its domestic needs, and it will face enormous difficulty in becoming just a middle income nation. Prosperity is a far cry away. And finally, opportunities do not remain forever. If India continues to disappoint and fails to get its act together, investor nations like the US and the EU will look to supporting other nations and let India fend for itself. That has been happening. A number of companies shifted out of China to other nations. India was bypassed only because of this kind of an environment. This is Bhargava signing off till we meet again.